Hello everybody, a very good morning to you and welcome back to another live stream here at Taurex and at Moss. Hope everyone's had a good weekend and is doing well after what was a very interesting, very slightly concerning NFP report on Friday. We're going to talk a little bit about that today because I think that's what's going to drive the volatility in the early beginning of this week. We're going to talk about trade ideas as well. Couple of trades didn't go my way last week actually, and that happens in trading. Believe it or not, everyone thinks you win every single trade. If you're online and you see any guru telling you they win every single trade, they're lying. Don't believe them. I actually probably lose more trades than I win overall, but my risk reward means that I can do that and still be profitable. So it is what it is, and we go back today and we go back to the drawing board and we see what the sort of bias now is for the dollar, what the bias is now for gold prices, and also the stock market as well off the back of what was a really interesting NFP report. So after the markets closed on Friday, I was really looking forward to the markets opening again on Monday. Mainly because I wanted to really get stuck in this week and try and see if we can get some more volatility this week and some more trading opportunities. If you could, please vote in the poll that's on the chat section, if you don't mind. It doesn't matter if the answer is no. I'm just getting an idea for who would be interested in any like professional mentorship from me, because I've got my course being edited and stuff, and it's a lot of work and a lot of effort's gone in behind the scenes to make it look great. So I'm hoping that there is some people who would be interested in that. And no, I'm not going to be charging thousands of pounds for it. In fact, 95% of the course itself is going to be free. So yes, we're also doing our normal giveaway today. I've seen some people in the chat asking how the giveaway works, and in the Discord channel, it's really easy. All you have to do is comment "win" once, please, in the chat section, and you'll be entered into a live draw. And that live draw is picked completely at random. At the end of the stream, I'll do the draw in front of you, so you can see that I'm not fixing it or to anyone that I know or anything like that. It's completely random, and all winners are typically credited within the same day as well. So your chance today is to win 2 lots of $10,000 Atmos funded challenges and 2 lots of 50% deposit bonuses into Taurex, which is really good stuff. I'm excited about that. So just going to say hello to everybody who's decided to join me early on this Monday. I do appreciate that, and I know there's some requests for markets coming in as well, and I'll take a look at all of those for you. So just quickly, hello to who have we got? We've got Vishal, we've got Smarty on the stream, the African entrepreneur, hello to you as well. Pejus, hello to you, one of our winners. Ankun, we've got Alatin, who says, good morning, may the market smile on you this week, bringing pips and profits your way. Stay calm, trade smart, and make it a week to remember. Really nice words. Thank you very much. Hope you're doing well. Day on, we've got Riz G, Blue Zone Trader, Echo Vibe, Pores Only Elder, Candela FX, the Ape Dawasa, Truck Kun, hello to you. Good to see you all. Hope you are ready for the markets this week. Want a portion on 11, hello to you. Hope you're doing well. Jamaica, Bobby, hello to you, Bobby. Love 666, Trade Lens, Lawan. Smarty says, we are so ready for gold to hit 4K. Drop me a thumbs up in the chat section if you believe that gold is going to hit 4K this year. That's probably a bit optimistic, but there we go. Let me know in the chat section what you think. We're going to be looking at gold today as well. Who else have we got on the stream? Yes, new week, new opportunities indeed. The movies, hello to you. Piyush, Yamel, Health Hatch, Lara, hello to you, Lara. Good to see you. Hope you're doing well. Lara's actually requested that I look through the CME FedWatch tool today. So that's another request, which is great. So I'll be taking a look at the CME FedWatch tool and what's happened to it as a result of the NFP print on Friday, which I can't wait to get stuck into because that was just very interesting. I've got some really good insights into that. Who else we got? Money Now, Daily with Shan, Jane, hello to you. Tanjil, Iman Nina, who else we got? Ruvi Kola, Sunny Patel, Fancy Guel. Brett says, I'm not feeling too well today. I have a fever and a body pain, so I won't be able to join the live stream. I'll be back next week. Wishing you all the best in your recovery, Brett. No problem. These streams aren't going anywhere, so get yourself better, and I'll see you next week, sir. Life with Forex is hard. Hello to you, MH, Smart Wallet. Loads of people. Daniel back on the stream. Hello to you, Daniel. Hope you're doing well, mate, and hope you had a good weekend. Ready for a new day in the markets. Dijar Young Wits. Loads of people. Have I missed anyone? Kirkton, of course. Curtin's always on the streams. Curtin's followed me for years. Hope you're doing well, Curtin. Dare King, hello to you. Nova Nest, Ahmad Hassan. Wow. Lots of comments coming through. Sorry, it's hard to say hello to absolutely everybody, but I'll do my best. Wonder 19, Buzz Stitch, Vortex Trading. Daniel, any idea how to trade the Japanese yen pair gap ups? Wait for the close and go long. Yeah, but also on the list today is having a look at some of the gaps from over the weekend. Of course, the Japanese yen in particular had some gaps that we will dive into, and I'll show you how the best way I believe to trade that is. Um, King of the Jungle, Usama Farouk, I see Lingo. Hope you're doing well. All right. So, and if you can, people who are just joining the stream, if you could vote in the poll that's on your screen, that would be amazing. Poker MVP. Bernardus Bhakti says gold will hit 4,000 with absolutely no doubts whatsoever. Okay, interesting. Right, let's talk about NFP on Friday. And sometimes I don't dwell too much on NFP, but it's really important whether you're someone who is a fundamental trader or not. It's very important to understand what's going on around the world, particularly in the US, and particularly around an NFP report, especially if it's an NFP report like we saw on Friday. And that is because the figure for the non-farm employment change comes in at 22,000 jobs added in the previous month. Forecast was 75, the previous was 79. It'd help if I showed you it, wouldn't it? Why is this important? It's massively important because this is the first time, the very first time, that we've seen back-to-back, quote-unquote, weaker slowdown in jobs data from one month to the next. The first time we've seen back-to-back weak reports in the jobs data, which is a significant one because that means then that doesn't become a one-off thing. We're starting to see potentially a trend forming in the form of a slower jobs market in the US. 22,000. Now, obviously, I've done some research and some reading into it. Obviously, the media have blown it maybe slightly out of proportion. Of course, the unemployment rate as well ticked higher as well to 4.3%. Look, it's a weaker report, but a dramatic slowdown, which is what Yahoo Finance have quoted it as, is slightly. It's exaggerated, I think, personally. I was trying to think of the word to say it. Now, far fewer than the forecast, the latest sign that the US labour market has cooled in recent months, blah, 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 blah. Let's have a look here. However, we're more negative with numbers showing. The first outright monthly decline since 2020. Revisions in early August had brought June's job growth down to 14%. These revised figures now suggest that over the past 3 months, the US economy has created fewer than 30,000 jobs on average. After the July jobs report showed 258,000 fewer jobs were created in May than June than previously estimated. So that's basically the point here about the forecasts that we're getting. And some of the figures that we're getting in previous months. There's some credibility issues when it comes to, or accuracy issues when it comes to these reports, because we're starting to see quite significant downward revisions, so people aren't starting to believe when we're seeing like higher numbers. Now, you can actually see, to be fair, in terms of monthly jobs added, you know, there has been moments where we've had under 100k, like back in March of 2023, and this goes back to January of 2023. This is the slowdown in the jobs market. You can see that the unemployment rate, more than anything, is the thing that's slightly concerning because that's been on a steady upward trajectory. However, the actual jobs numbers itself, they're a bit random. There's not really a trend in which you can determine here, but what you can notice is over the past sort of 6 months or so, we're sort of consistently hovering around that 100k or less, and over the past 4 months, we're quite significantly below that 100k. Now, that's important in the sense that what that means now is we're starting to see a slowdown in the jobs data, and that puts pressure on the Federal Reserve, Jerome Powell, to start cutting rates. And in theory, that means higher gold prices, and that means lower dollar prices, in theory. And sort of higher stock market prices, but not in a time of economic uncertainty. And this is what I wanted to touch on, which is really, really important. I've said this so many times. That is basically that when we see the Federal Reserve start to cut rates because the economy is slowing down, that's not seen as a good thing for the markets, right? in theory, flooding capital and money into the markets via lower interest rates is good for stocks, but not during times of recession. Or recession, not that we're in a recession yet, but in times of recessionary pressure, should we say. Now, the reason I'm not calling this a dramatic slowdown is because I want to take you back to what's probably the most, two times really. This time here, when you actually look at this now, this looks even crazier when we're talking about the numbers we've got. If I zoom, can I zoom in? Can you see that? 2020 on the jobs data. So COVID, minus 20,000 jobs in May of 2020. Minus 7, I know this was like an unprecedented time. That's a dramatic slowdown. Obviously, we know that it snapped back really, really quickly. Let's go back to, let's say, the global financial crisis, which is one of the most famous recessions. And I'm not saying we're anywhere near that yet, but I just want to show you what happened to the jobs data in the lead up to the global financial crisis. And it was seeing the similar sort of patterns to what we're seeing now. We're seeing figures of around 150k, and then suddenly we start to get those figures of 92k, 18k, minus, and you start to see, if I go back, consistently in 2008 we started to see jobs actually being lost, so minus figures in the jobs data. For me, that's the sign. We're not there yet, guys, but just bear that in mind. We're now at what, 22k? If we start to see minus figures consistently, then that could be starting to build up the momentum for a recession. But we're not there yet, because when the recession really did hit in 2008, 2009, you see the jobs data falls dramatically from like minus 60, minus 50, minus 20, blah, 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 to minus 240, minus 533, minus 524, minus 600, blah, blah, blah. And you can see all the way up until April the 2nd of 2010, that's when we started, even after that, we still saw some minus figures. So I'm not saying we're nowhere near this bit, which is where the recession is, but we are flirting with like 2007 trends in the job market. What happened during that time is the Federal Reserve then started to announce interest rate cuts when they saw the jobs market slowing down, and the stock market fell 55% despite the Federal Reserve cutting rates. So just bear that one in mind, which is why on Friday, when you go onto the charts, when you go onto like the NASDAQ, for example, I know it's recovered now, but that's why you saw such a sharp hourly candle to the downside around the NFP print, because even though, interest rate cuts, great, interest rate cuts are coming, market goes higher. Actually, interest rates are coming because the jobs market's slowing down. And then we see a massive spike lower. It doesn't surprise me that the stock market's recovered, because, as I said, we're not in that period of time where there's any like significant panic in the jobs data. Not yet. So now I've just said all that, let me just quickly go through I know everyone wants to let's move on to the charts now, and then I've got another request on the CME Fed Watch tool, so I'll do a bit of chart work now. Adolphus, hello to you. I did enjoy my weekend. I hope you're good as well. And Smarty says on there that the Fed rate cut has been priced into the dollar weakness, and it sort of has, but there definitely could be some more dollar weakness coming now if we start to see a materialistic slowdown in the jobs data, and that's my biggest concern. And what was the risk for me when it came to buying the dollar last week? Yes, let's move on to the chart. Okay, a bit of patience. That's golden knowledge that I've just given you there for free. NFP is low, which means interest rate cuts, so gold is going to continue going up. Yes, in theory, that's pretty much how it works. Quick Mila, hello to you. Good to see you. Streetlights and Teeth, or 60. NFP numbers have been revised down 12 times since January 2024, Kirkton says, which is astonishing, really. Tangiel says Taurex on top. Yes, indeed. Best broker Taurex. Nice one. Let's go to chart gold start distribution. Euro yen already closed the gap and went quickly. Oh, God. It's hard to keep up. Right, okay. Here we go, guys. Here goes gold. So, what I was going to say to you is, instead of thinking about what we're currently seeing at the moment, when interest rate cuts are coming, which they are, and you think about, is that dollar positive, is it negative, is it priced in, is it not, is that good for the stock market, blah, blah, blah. Let's think about gold. Right now, we've got so many bullish factors in play for gold that all it was going to take, and I said this last week, the only thing that was keeping gold contained in that range that we saw, which was like this one, was the fact that the dollar was starting to base out and tick higher. That was what was keeping gold contained. Everything else is pretty much bullish gold. There's not really any bear factors in play, to be honest with you. Then we saw the breakout. Then on NFP, obviously NFP is what NFP was. The gold dollar fell, and that really then gave the license for gold prices to really start surging higher. So if you want my current prediction on gold right now, I'm telling you from a fundamental standpoint, what's coming in terms of interest rate cuts, whether it's interest rate cuts into a weak economy or interest rate cuts because it's just time to do it. I still think this is a recipe for much more gold upside, and still remains probably the most bullish market out there. You can see, the only thing I'm going to say, and I think you people will know what I'm going to say, is that we are in uncharted territory right now. We're currently trading at a price that's never been seen in gold. So is that a sensible buying opportunity from a day trading point of view? Maybe not until we get a pullback. But from a medium term point of view, I definitely believe that gold prices will continue higher. And it wouldn't surprise me if, when this is all said and done and the Fed begins its interest rate cutting cycle, yes, we might have a pullback, but 4,000's on the cards for gold prices in the medium term. Like, I say medium term in like 6 months. So, thank you very much. Fun with Sunny says, I'm giving perfect knowledge. Leighton says, you guys have a good understanding of the fundamentals. Who will teach me? Well, in my trading course, which is coming out, there is a whole fundamentals section. It's quite heavy because it has to be. But I cover all of the fundamental events and what they mean for markets, typically, in hopefully a really nice and easy, really nice and clear and easy way to understand for you. So yeah, just wait for that. It's coming out. I'm hoping that course is going to be edited for me in the next 6 weeks or so. Fingers crossed. Okay. So when it comes to gold prices for today, and you look at the current quite clearly market structure, which is bullish, move higher, pull back. Move higher, pull back. Now we need to wait for something similar. So for me, if I was going to outline a trade on gold, and last week I did outline a trade, do you remember? Down at 3,500. We only got to 3,510. So I'm going to delete that alert actually, because that's too far away for a pullback for me. If you are already in this market, there's some people must be making some serious money on gold right now. I'm just trying to think what a sensible way to try and trade this is. Okay, there's two levels. The first level is here. Okay, and I would call this the more aggressive entry. The second level in which I would be comfortable getting into a day trade on gold would be this area at 3,555. 3,555. There's also imbalance, which I'm sure some of you have already spotted, you smart money traders. Imbalance in there. So this is probably the more sensible trade, is to wait for this liquidity to be taken on this low, because I imagine there'll be a lot of buyers here. A filling of this candlestick imbalance into this demand zone, and then go higher. So where that sits currently at 3, let's call it 3,550, and we're at 3,600 now. It's not a ridiculous pullback. we have to remember that sometimes when we trade at these all-time highs, you can get some really, really sharp, aggressive profit taking, particularly if there is any strength that comes in the US dollar, which we'll talk about in just a second. But for me, that would probably be my ideal trade. Something that looks like that. And then, in terms of the target, I mean, you'd probably just target wherever the previous high was, and then always manage your risk, and then take some portions off the table at 1-to-1, 2-to-1, etc. And that's probably what I would look to do. So that, guys, is Jacobs. How can we get more info on your course? There's nothing really else to say other than the fact that I've recorded it and it's now in edit. The team are currently working on the actual educational hub where the course is going to sit. Alongside the course, I will also have a premium group where I will do live strategy trading from the strategies that are going to be in the course. I've also got EAs for those strategies as well, which I use myself, which I'm going to share all the back-tested results for. Also, I'm going to do spin-off educational workshops. So I'll deep dive into one of the lessons, so a theoretical stream or a webinar, if you want to call it that. And then also for more exclusive members, then I'll be offering one-to-one sessions. But obviously, that is for exclusive members because obviously one-to-one sessions do take a lot of time and a lot of energy, and I've got a full-time job to manage as well. So, but that's still going to be something which is available to people. Okay, no problem. Amazing. Thank you very much for the comments. Oh, there's actually so much to go through today, guys. Just remember, for those who just joined, the giveaway is the draw is underway. We've got 144 entries. You'll probably see in the thumbnail as well. Should we get ignore that. Should we get 500 views on the streams, then I will give a bonus prize away. So if you do have traders, on X, go onto my X profile, share, retweet my tweet about the giveaways. You'll see it on my profile. Follow me on Instagram and stuff, and tag me. Get this out to as many people as you can. And every time we hit 500 views on the stream, I will give a bonus prize away. Maybe a bonus 5K. I was thinking a bonus 5K prize for Atmos. So please run it up, guys. I appreciate it. All right. So now, I just want to quickly go through the CME FedWatch tool, if you don't mind, people, because I had it requested from a valued member of our community, Lara, who wants me to go through what is happening with the CME FedWatch tool and what it means. And it is genuinely, I know people sometimes aren't interested in this sort of thing, but this right here, that is what moves the markets. Interest rate expectations compared to what actually happens with interest rates, okay? That is the golden ticket. If you can understand interest rates and how things are priced into the markets and what's coming next and what that means, then you're onto a winner when you marry that up with technical analysis. So the CME FedWatch tool basically gives us an understanding of what the Federal Reserve are going to do next with interest rates. It gives us a probability percentage chance. So you see it along the top here, we've got the different meetings that are coming up, so the different Fed meetings, 17th of September, which is in 9 days. And then you've got one on the 29th of October and one on the 10th of December, right? So let's click on the most recent one. When you go down here, you should know what the current interest rate is. But if you don't know what the current interest rate is in the US, if you see down here where it says target rate BPS, it says 425 to 450 in brackets current. That's basically the current interest rate. So between the 4.25 to 4.5% mark. Now, as you can see, we are now got a 90% chance that on the September the 17th meeting, the interest rates will be between the 4 to 4.25% mark. So a 90% chance of a 25 basis point or a 0.25% rate cut from the Federal Reserve. That's what that means. We're also pricing in a 10% chance of a 50 basis point rate cut down to this range of interest rates. I don't think we'll get 50 basis points. I think if we did get 50 basis points, that would be a big shock to the markets. I'm not actually sure how the stock market would react to that, but the dollar would go down, I think, off the back of that. So I'm not too interested in what's priced in for September. Hang on, I'm just seeing the comments here. Yes, I'm going to look at the DXY. Adolphus says most prop firms don't allow news trading. If I have a trade running before a news event, what do I do? Well, that's not true, because if you choose, some prop firms, Atmos allow this. If you choose a swing account, you get 1 to 30 leverage, but also you get the ability to trade with around news events. So if you're with a prop firm at the moment who doesn't let you trade news and you want to, I'd suggest you move prop firm for a start. However, I understand that if you've already got the account open, there's nothing you can do. If I have a trade running before a news event, what do I do? It's really, really simple. Make sure that your stop loss or your take profit is far enough away that even if the news event was going to shoot the price up or down, it's probably not going to stop you out. The second thing that you can do is just close the trade and don't take the risk. They're the two things in which you can do, really. Don't leave your trade running, either if it's near TP or near SL. Don't leave those trades running in the lead up to news events, and don't open any other new trades, I think, within a 2-minute window on either side of the news. Otherwise, the prop firm will cancel your challenge. All right. So what I'm interested in terms of this, is what we're expecting in the next meeting. Okay, because the next meeting, currently, we're pricing in a 71% chance of another 25 basis point rate cut. So that would mean 0.25% this time and 0.25% in October. And then in December, another 25 basis points. So the markets are currently pricing in 0.25% next week or whenever it is, 0.25% in October, and 0.25% in December. So around 0.75% interest rate cuts coming. Now, previously, I said slightly optimistic. I actually think that's pretty much in line with what I expect. However, I'm now starting to turn bearish on the US dollar, because I'm not ruling out a 50 basis point rate cut this year, which would mean that currently what's being priced in to this CME Fed Watch tool and priced into the markets is mispriced in terms of more dollar downside potentially, which I know is a change from what I said last week. But I think there's a risk here. The risk comes from the jobs data. If the NFP report next month in October comes in weak again, I think that we could be seeing a 50 basis point rate cut in October or December, which would mean more interest rate cuts than the markets are currently pricing in, which means more dollar downside, which means more gold upside as well. And that's one of the things that I'm slightly concerned about when it comes to the US dollar. Now, just to quickly give you an understanding, we have got this week US inflation out. Where is it? Oh, Jesus. When is it? When is it, guys? And we'll talk a little bit about US inflation on Wednesday's stream. However, the US inflation is expected to be 0.2% higher than the previous. Why is that worrying for me? It's worrying for me, and I don't mean to be all doom and gloom, because we're not in a recession. Weaker jobs data, higher inflation. That's stagflation. For those of you who don't know what stagflation is, it's the most concerning thing, the most damaging thing that an economy can have. And that's where prices go up as the economy weakens. Prices are meant to go up because the economy is strengthening and there's lots of money flowing around and people are spending. If we see that report, 2.9%, if we see inflation not budging, yet the economic data is deteriorating, I think we could be in for a correction in the stock market of around 5%. which doesn't mean I'm turning bearish on the stock market. It just means that I think that would be a correction because people would start to cotton on to the fact there might be some stagflation coming. So that's something that I'm definitely slightly concerned about when it comes to this week and the US inflation report. So yeah, slightly worrying about that one. So we'll see how that comes through, and I'll do a breakdown of US inflation at another time. Now, just to quickly pause the stream there, when it comes to if anyone is looking today to get started with Atmos, if anyone's looking to get involved, if you scan the QR code on the screen and you buy a challenge today, in the coupon section, if you type Connor, you'll get 15% off. It will confirm the discount of 15% off 50k to 200k challenges and 30% off of 5k to 25k challenges. If anyone has any questions on that, then feel free to reach out. But that's our my September promotion that we're running. Just make sure you use code Connor in the promo section, and it will sort itself out for you. Okay, if anyone's interested in that at all. Right. So US dollar. Where are we? Last week, guys, I took a 2% loss trying to sell GBP USD and trying to buy dollar yen. I would have taken that trade a million times over, so I'm not too fussed. Currently, where we sit right now, I think this is becoming increasingly likely that we actually see a break below this demand zone, a retest of 97, and then a move lower because of what I've just spoken about. However, I have a rule in when I trade, and that is it is what it is until it isn't. Yeah? So at the moment, we're very much still hanging on to this area of support. Now, the thing that concerns me, and because I've seen things with my eyes enough times now, is that really I believe that this should have gone by now. Like, if it was going to go, I'm starting to think we're starting to run out of time because we've tested it 1, 2, 3, 4, 5 times, 6 times if you class the test that's currently happening right now. Yet the market has failed to really have that big run from here, which is making me think that the bulls out there are starting to run out of patience and starting to really, there isn't much underlying bullish strength here, despite the fact this is a good demand area, support area. However, that doesn't mean I'm going to blindly sell the US dollar. What that means is I'm probably going to have to sit on the fence. I don't want to take another 1 or 2% loss trying to buy it from this area, because I bought it sort of up here because I thought that was a nice candle, and it was, and I'll take that trade every single time. Instead, let's wait. Let's just give it this week, really, or the next couple of days, and let's see if we start to make a move down into and start to see a candle closure below. If we start to see candles closing around 97.3, around this sort of below where this text is, then we're probably going to come lower, and that's really great because that gives me. It's finally telling me what I want. I have no preference for buying or selling in markets. I just do what the market's telling me. And what it's telling me right now is that we're in high risk of the dollar breaking down, actually, and we could be heading lower here. I'm just reading what you said about Atmos funded in terms of news trading. Did you select the swing accounts? News trading is allowed on the swing accounts. And you can pay in all of these different currencies. You can pay in Bitcoin, PayPal, Skrill. I believe you just need to select a swing account in order to be able to trade. And you can see the discount here, guys. Big discount if you're interested in the thing. Just make sure when you go start trading journey and you come to the purchase, it may already have put the discount in there, but it probably hasn't. So what you'd need to do is when you do the swing account, see? So news trading on standard accounts isn't allowed. but on swing accounts it is allowed. Okay, and if you have a discount code, just click down here and type in discount Connor, and it will apply the discount for you. In the funded phase, I see. Yeah, I see what you mean. I thought you meant in the challenge phases. All right then, guys. So that's that. Gold is still going. Wow. We've spoken about the stock market. Bitcoin. Oh, that's unlucky. Just wicked out there on Bitcoin. I want to give you another trade update on oil. I'm now out of oil officially. Nice trade. Reached a maximum of 4.7 to 1 risk reward. This is why managing your risk whilst you're live and having a plan is great, because when I reached 1 to 1, 2% risk. When I reached 1 to 1, which was here, I closed half of the position. When I reached 2 to 1, I moved my stop loss to entry, closed a little bit more. So overall, gained about 1.3, 1.4% on oil, which pretty much, I'd say 0.7% when you think of the dollar losses last week. So not too far away from break even. So I'm not in any trades at the moment, and I'm hoping today I can find a good trade. What do I think about euro dollar? I mean, this is still very much active, but same sort of thing as what I think about the dollar index. We've had the test of all of these resistance areas and these trend lines. We could start to be. I'm at higher risk now that we start to see this, and euro dollar could be hitting 1.2. And then when it comes to GBP USD, similar sort of thing. Look, take that trade every single time. Nice reaction, nice liquidity sweep, but just again, we're just really struggling to make that next wave lower. And in fact, we actually created a higher low here, which makes you think that even pound dollar is going to start to tick higher. For complete transparency, I'll show you the trades that we had on, that I had on GBP USD. You can see didn't really get moving on the trend rider. You can see that. So that trade lost. That was 1%, and then again on USD yen, again would always take that trade. In fact, we did actually get moved into a decent amount of profit there. So if you did take some money off the table, you'd have been fine. I didn't, because that's not what the strategy rules are. And again, you can see we're starting to move lower. So when it comes to, someone asked me about USD CAD, and then Dan's asked me about the yen pairs. USD CAD. What do I think about it? Let me go right. Yes, Dan, I'll take a look at that. You're buying Euro yen, GBP yen, or Swiss yen. Any idea what is the best to pick? Yeah, I'll take a look. Keep voting in the poll, please, guys. Where is dollar? Where is USD CAD, people? I can't find it. There it is. USD CAD. Little head and shoulders forming here. Potentially. We have got. See that? So for me, this looks like a classic head and shoulders pattern, actually. By the way, TradingView is bugging out so much. It's not letting me draw things like as accurately as I want them to. Here we go. Shoulder. There. Head. There. Shoulder. There we go. That's better. So for me, if we're right about the dollar, and that's that it is going to start to break down a bit more and have that next wave lower on the higher time frames, this 4-hour USD CAD head and bearish head and shoulders pattern looks really strong, and that means we could then see a move down to around 1.36. Should we wait for the neckline to break for sales, or can we sell right on the shoulder? What market time frame do I execute on? Typically, it's on the 4 hour time frame or the daily time frame. If I go to the hourly or below, then I lower my risk. The sensible option, whoever asked that question, sorry, Sunny, would be to wait for the breakdown, retest of neckline, then go lower. However, you can actually see potentially. Okay. No, yeah, that is the best way to do it. I was trying to see if there was anything which could like give us a sell now, but that would be high risk. If I was going to do that, I mean, you could play the risky. This is the riskier way of doing it, and this is completely up to you. This isn't what I would necessarily do, but you could look at something like this, okay, and you could go right. We're going to hit that 1.36, and that is a 5-to-1 risk reward. You could do that, but slightly risky because the head and shoulders hasn't been formed fully yet. So you're sort of trading in anticipation rather than in confirmation. I'll leave that up to you. I wouldn't do that, but that's something you can do. Low end, the time frame that I usually execute on is the daily or the 4 hour time frame with a 2% risk. If I trade on a lower time frame, i.e. 1 hour, 15 minute, very occasionally 5 minute, then I lower that risk to around 0.5 to 1%. Okay, Dan, just taking a look as well at your pairs, your Japanese yen pairs, and guys, we're going to do the giveaway winners in just a second. We didn't reach 500 today, so we're not going to be doing a bonus prize. So, where's Dan's question? There were so many comments. Euro yen, pound yen, Swiss yen. What is the best? Well, let's look at Euro yen. Okay. Gap over the weekend. Market closed there and opened here. So there's the gap. Fair value gap. And you can see I would always use in this situation the 50%. So that's where we are right now. Okay. Pound yen. Market closes there and opens there. FVG again 50% because it's quite a big gap. 50%, and again you can see we're reacting from it already. And the last one is Swiss franc, Japanese yen. Market closes there, opens here. Again, this is right. Do you know what, Dan? Do you know what I would do? Sorry. Do you know what I would do? I would split your risk. I would split my risk across all three, because all three are at the 50% of the fair value gap. In fact, it's a nice spot because what I'm going to do in front of you guys today, which I didn't expect I was going to do. I'm going to stick a couple of lots on. If I could find the yen pairs, then I would do that if I could find them. Am I going crazy? Probably am going crazy. The answer to that is probably yes. I literally, It's because I've got quite a lot on my screen as well. I literally cannot find. There we go. So I'm going to buy Euro Yen. Stop loss 172.622. Just want to check how much that loses me. 500. So that's about 1%. I've probably put a little bit too much risk on that. I should have just used the risk calculator. Do apologise, guys. That was poor from me. Just going to close a bit of that. And then the next one for me is going to be pound yen. Yes, add it. Guys, I hate MetaTrader sometimes. Does anyone else know a quick way in which you can actually find a pair? Because there's so many markets to choose from, especially on your desktop. Here we go. Boom. Let's just do. I don't know why I'm not using the risk manager tool, which is literally right in front of you all. Pending order stop loss is going to be here, and take profit roughly up there. And I want to do. I only do one take profit, don't I? I want to do risk amount of 0.75%. Buy that. Okay, we're in. Okay, and then next one is. Why has it only done 0.1? I need to do some updates to the risk manager tool. I do apologise, guys. I'm just going to make this quick now. So I'm only risking about 1.5% across all of them. But I do like to trade gaps. Okay, there we go. Let's just see how that runs for a bit. With my stop losses at the bottom of the gap. So, apologies, that took a long time. So my stop loss would be like here for that's CAD, not even Swiss. Swiss. I wouldn't trade this. Oh, I've just done it. I've just realised what I've done, Dan. Sorry, mate. It's been a morning. Okay, right, whatever. They're all good. I quite like them all, but I'd always, for me, I'm going to put my stop loss at the filling of the gap, like just a bit below it, with a small. That's Dan's trade idea. I trade with both, Lawan. I trade with Atmos Prop, obviously, and also Taurex Broker. What I just showed you there was on my live account on Taurex. If I can find it. Here. Okay. So let's see how that goes, guys. Free trades placed live on the screen for you. Amazing. Right, okay. What we'll do then is we will do today's giveaway, which is... Look at the comments. Hang on 2 seconds. good luck to those who are in today's draw. We have got 270 entries. Someone's just entered right at the end. So we're going to be giving away two 10k Atmos funded challenges and also two lots of 50% deposit bonuses. Really, really simple. I'll draw out the winner by clicking choose winner. If you are a winner today, it will tag in the chat section. You can message me on X or on Discord, depending on like where you come from, and I'll credit you, but we do need to verify that it's the right person. Or the sometimes easiest way is if you tell me what your username is on any of those channels, and I can reach out to you because I've already verified that it's you. But either one of those is fine with me. Good luck to those who entered. The first winner of our 50% deposit bonus and a good start to the week goes to Saki Suyuba. Well done to you. First winner. Amazing start to the week as well. And this will be credited within the same day. So a massive well done to you. And the second winner is Last by Self. There are two winners of our Atmos challenges. Amazing stuff, guys. Well done to you all. And as I said, drop me a message on those channels or put your usernames in the chat section and I'll get those credited for you today. Don't worry if you didn't win. We'll be doing more giveaways on Wednesday's stream. Next up is the deposit bonuses into Taurex. So you can get up to $250 deposit bonus into Taurex, and the winners of those are Sintesa. Oh, is the stream gone, guys? Can you see me? It might just be my laptop. And the second winner of that is is Butter of Bread. There we go. The two winners of our 50% deposit bonuses into Taurex. So we've had our four winners today. That is Butter of Bread, Sintesa. There's so many comments going through. I don't even know who the other two were, but I can go back on the stream and find out. Sintesa, well done. So drop me a message, guys, on Discord or X, and I will credit you with those rewards if you wish to do so. Look, if you didn't win today, there's more giveaways coming on Wednesday. We do this every single week. If you do want us to get started with a prop firm challenge today, if you use code Connor at checkout by scanning the QR code, you'll get the 15% off of 50k to 200k and 30% off of 5k to 25k. And we've got some of the cheapest prices in the industry as well. So feel free to take advantage of that if you wish to do so. Sintesa, how to claim? Just message me. Message me on Discord. And Last by Self, same as you. Message me on Discord or on X, wherever you came from, and I will credit you with those prizes. Just drop me a message, please. All right. Okay. My Japanese yen trades are moving into profit, so I'm just going to go and sort out all the stop losses for that because it was a bit of a mess. I do hope everyone has a. Oh, I've just been given a username. Thank you. I will message you. I do hope everyone has a good trading week. Pretty big week coming up as well. Lots of market movement I expect from obviously the NFP and in the lead up to PPI and CPI on Thursday. I'll be back on Wednesday for another stream. If anyone does need me, I'll be active across the social media channels or on our Discord channel. Links in the description for you to join for free. And until then, guys, I hope everyone has a good trading day. Trade well, trade safe, and I'll see you all soon.